TSMC, big quarter, big guidance. Shouldn't this quarter just put to bed the weakness we're seeing in Mag 7 out of the gate this year?
You know, it's funny, the questions that have been surrounding the whole AI boom. I think this earnings report really more than anything supports the idea that it's going to continue to move forward. And so, yes, it should support some of the Mag 7 names. You saw the support already for the suppliers for TSMC. So we look at ASML, we look at Applied Materials, Lam Research, all of those stocks up in pre-trading because of such strong earnings that we saw here. So I think what it does is this rotation that we have been seeing out of tech, out of Mag 7, especially out of software and tech, into other areas of the market. Maybe that starts to slow down a little bit as people say, wait a minute, perhaps there are more legs to this than what we were thinking, or they start looking at other components within the AI sector. Like I said, maybe some of the supplier names versus some of the Mag 7, but I do think it gives that whole sector a little bit more support, especially when you've got them saying CapEx is going higher, their profit margins are going to go higher, sales are up 20%. Lots of good news here for the AI story.
Brooke, Victoria makes up a very good point. TSMC lifting the chip space, but also a lot of the suppliers too.
That's right. And what we're hearing is some of their customers, NVIDIA, Apple, Qualcomm, Broadcom, AMD as well. And I think to Victoria's point is they sort of solidified their position or their thoughts on where exactly this market is going in the near term. And actually on their call, what they had said, the CEO saying that they talked to several cloud service providers. They show me the evidence that the AI really does help their business. And that sort of solidified what they said was this lack of risk. They said they double checked their financial status. They're very rich. And that sounds much better for the TSMC story. And I think this really just goes to show that this sort of, came in as a vote of confidence for this AI momentum. This came in as a suppressant sort of to that investor fear that we've seen about that AI bubble risk. And certainly that message from the CEO on the call is why we're seeing these others move higher this morning as well.
I've said this before, Inez, I still think TSMC needs a better corporate logo. They got to update it for this AI era. But look, Inez, now we know why Jensen was wearing that alligator black leather coat at CES. He knew this TSMC quarter was going to be big, and he's probably sitting on a big quarter too.
Yeah, 100%. And look, just taking a look at what some of the Wall Street commentary on this is like, they're looking at that CapEx outlook and saying that this shows that the AI cycle is accelerating. You've got Wedbush that is saying that a beat across the board, gross margins, a major positive surprise there, and also that this company is really firing on all cylinders. That competitively, it is the leader here. And you've got Susquehanna saying something similar. That their position is unmatched. And if you take a look at also what the street is looking at for the stock, they're looking at an average of 382 for the stock, 29 buys, 2 holds. So it speaks to momentum in the industry, in the AI industry, as Brooke was just mentioning, but also for the leadership of TSMC.
Well, Taiwan Semiconductor fueling AI optimism as the chipmaker reports fourth quarter results and guidance that topped estimates. Most notably, the company's better than expected capital expenditure forecast. Perhaps welcome news for the AI market. Baird tech strategist Ted Mortensen is joining us to discuss. Ted, it's always great to see you. I was indeed struck by that CapEx forecast. I mean, everybody's raising their CapEx forecast, it seems. And so TSM kicking things off this year, $52 to $56 billion is what it's expecting. What did you take away from that and from the rest of the results?
Well, the CapEx is very interesting. It's up 32% for 2026, which is a huge number. And what that represents is really the core demand they're seeing. The cloud titans think that TSM is essentially the bottleneck for AI on chip manufacturing. So that CapEx number was above the street, and that's why all the semi-cap equipment names are rallying. But there were some other metrics coming out of the call that are equally important. TSM is going to grow at 36% versus the broader foundry index at, call it, 16%. The other thing is on the high performance compute side, which is 55% of their revenues. Think of that as just Gen AI. 18% of their total revenues are now Gen AI, and they can't meet demand. The last thing is this 2 nanometer node is the magical node from performance and power. They are at least a node and a half ahead as it relates to a technology advantage from any of their competition on the foundry side. So they've really got core dominance going on.
How should we be thinking about TSM in terms of what's going on between U.S. and Taiwan? Of course, we're working on a trade agreement with them, and I expect there's some expectations that they're going to be building more in the U.S., but how should investors be thinking about that?
It plays into the geopolitical that is not in this market. If you look at TSM's revenue, 74% of their revenue is going to the U.S., and they are accelerating their fab construction in Arizona. They're actually pulling it in pretty dramatically. They're investing $167 billion into the U.S., and that gives the U.S. a huge advantage, not only on AI, but also on defense capability. A lot of those defense silicon is done at the 5, 3, and 2 nanometer node in the future. So it's really providing a wedge between the U.S. And through our policies of the Trump administration, the U.S. and China. So again, U.S. is 74% of TSM's revenue. China's only 9% of TSM's revenue, and they're restricted on any of the leading node productions under 14 nanometers. So from an economic standpoint and a technology standpoint, it really favors the U.S. and quite frankly plays in the geopolitical argument.
Yeah, it definitely seems that way. I was struck on the broader AI note on a comment that the CEO, C.C. Wei, said on the call. He was asked something by an analyst, and he said, "You're trying to ask us whether AI demand is real or not. I'm also very nervous about it," he said. He talked about how much they were spending, and he said, "If we don't do it carefully, that'd be a big disaster for TSMC." This seemed pretty honest, right? That like they're worried about the same thing that everybody is asking questions about. But is it sort of, I mean, they are putting their money towards that, so they must have some high degree of confidence.
I think they've got visibility through the cloud titans out anywhere from a year to 2 years. And when you have that visibility and they're controlling the purse strings, if you look at Google, Microsoft, Meta, they can all support this CapEx through their existing businesses, and they're giving TSM visibility out that they have confidence on building out that CapEx and running these fabs at very, very high utilization. One thing that also came out on the call that I think is noteworthy is their gross margins came in at 62.3% versus 59% year over year. They are killing it as it relates to utilization and cost takeout. So they're really the key for the cloud titans on bringing this AI infrastructure to light.
Do you think that investors should own TSM itself? Do you own everything that sort of touches it? I mean, as we know, this is a very interconnected web within this new Gen AI build out. So how do you think about investing in it?
I think 25 was easy. 25, all boats lifted. I think 26 is going to be more volatile, and you really have to segment your buys. From the cloud titan perspective, we're trying to favor companies that have really, really good free cash flow, and again, that their core businesses support this CapEx, like a Google, Microsoft, a Meta. Apple, very controversial. They're behind as it relates to the AI trade. When you're asking another cloud titan to power Siri, that's Google, that rubs a fair amount of my clients the wrong way. As it relates to semi-cap equipment, there are roughly 3 plays if you want to do the bundle of ASML, AMAT, and Lam. And then from the semiconductor side, I think NVIDIA is obviously the biggest derivative coming out of this report. I think what people are missing on NVIDIA is their software dominance. their development of 3 to 5 years ahead of anybody in the eco chain. That's an overweight, in our humble opinion. And then there's some specialty semis that play on this infrastructure area that were cyclical that are now turning into secular plays. Like look at APH, Amphenol, or look at the entire optical group, whether it be Ciena, Coherent, Lumentum, even Cisco or Arista, that build out on the infrastructure side, as well as memory, obviously Micron, SanDisk, Samsung, and SK Hynix. We've got 2 years of unbelievable demand in front of us. So you've got to be very, very specific.
Very specific. So it seems like 26 might be harder than 25, but it seems like there's still a lot of opportunities. And thankfully for our viewers, you enumerated a number of them there. Ted, it's great to see you. We'll catch up again soon.
Okay, Julie, take care.
Thank you.